From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 21st, 2016. In today's video, I'm going to go over each of the U.S. currency pairs as we anticipate potentially highly significant and volatile news coming up at 2 p.m. Eastern U.S. time today with the FOMC rate news and information from the Fed about monetary policy could prove to be highly volatile. So in all cases, of course, you want to use appropriate risk strategies to protect yourself in case the market does something you don't expect it to do. I also want to recap a couple of the trade suggestions made over the past few days and see what's happened with those. Let's get started here on the USDCHF, the dollar franc. Over the past few days, we have seen it break above resistance, so we were looking for opportunities to take short intraday buying opportunities here on the franc. Now, yesterday we had a buy right around the 97.90 level, which is the top of the green shaded area. You see over here, top right hand corner of the chart, there's a blue box right here, and you can see the green zone. It'll make much more sense when we get down to the 4-hour time frame. We took a buy there, the market went up, we saw over 20 pips, it came back down, took us out at our break-even stop loss. Once we see over 20 pips, I typically go break-even, and now it's gone much lower. And I think some of this is potential anticipation of the Fed news. Working its way lower doesn't necessarily mean it's going to go lower on the Fed news, just means that right now the market is pressuring lower and likely some profit taking from the rise that we've seen over the past couple of weeks. Take it down to the 4-hour time frame. There it is, rising over the past couple of weeks. We could take a short trend line like this and see that rise. We're coming back down towards the yellow shaded area. And by the way, again, yesterday the buy from the green zone around 97.90. We saw the market push up 22, 23 pips of profit as it pushed to the high. Trade manager took us to break even over 20 pips, and it came down. That little red arrow right there shows that we closed at 97.90 on the franc yesterday. So out of that trade with break even, kind of happy about that because it's continuing to pressure lower. I would watch this 97.35 or so level, the yellow zone, as potential support for the day. And then, of course, at the Fed rate, information will look for what kind of volatility happens there. Take it over here to the euro. Not a whole lot different than yesterday. We did see a little bit of a dip lower, interesting enough, where the U.S. franc made that rise, and then the fall, we see the euro fall and now rising back higher again. We'll see that on the 4-hour. But for the most part, still in a rising long-term channel here on the euro dollar. We'll have to see what the Fed rate does. If it's a positive sentiment after the Fed information at 2 p.m., we could be looking for this to go lower. If it's negative, it's poor, then we could be looking for it to rally once again, go back higher. 4-hour time frame, again, there's the similar yet opposite reaction that we saw over there on the franc, the dip and now the rise back underneath the pink shaded area. Again, very likely that you'll want to stay out of these two currency pairs, or really any U.S. pairs, prior to the Fed rate statement. You don't want to get stuck in something and not be able to do anything with the trade prior to that FOMC news. GBPUSD, it's been a phenomenally profitable currency pair over the past 2 weeks. We've sold it up at the top of the range, and it's been profitable as it's gone back down to the bottom of the range, this black box that you see here on the chart. We are at the very bottom, and very difficult to go short right now at the bottom of the range. Take it down to the 4-hour time frame. There's the fall, there's the profit we've been seeing on the way down. We actually sold it up here at the pink shaded area, and another opportunity to sell it at the orange shaded area. So it's been a profitable currency pair over the past couple of weeks. You can see the congestion, the hesitation down here between the green and the purple zone. Again, I don't think I'm willing to dive back into this prior to the Fed rate statement later today, but if it's positive for the U.S., we could be looking for a breakdown of that range and a continuation of the downtrend. If it's negative, maybe some pullback and turnaround here for this currency pair to turn back higher once again for the GBPUSD. USDCAD, we've been following this currency pair at the top of this black box in the range and into resistance. You see the blue box here at the top, resistance, the red box over here, resistance. We've been studying that, noting the fact that you really didn't want to buy it at the highest high. So if you didn't do that, good news. It's now turned back lower into the 1.3150 level. And the supports that we've seen, look at all these circles. You see resistance where all these circles are. That's acting as our support, 3150 to 20. We also see a little bit of a jump in oil over the past day or so. Oil's risen a little bit, so that often causes the USCAD to go down. There's an inverse correlation between oil prices and the USDCAD. So when oil goes up, this goes down, and that's what we've seen over the past 24 hours. Take it down to the 4-hour time frame. There it is right there, making that fall back under the orange zone down to the yellow zone. Again, we've been kind of stuck between the green, orange, and yellow zone over the past few days. Positive news out of the U.S. with FOMC. We look for support here. The potential is that we break the green zone and continue the uptrend here for the USDCAD. That's if we get positive news. If it's negative sentiment after FOMC, a breakdown of this yellow zone and a turn back down towards the pink zone is very possible for the dollar CAD. Pushing over to the US yen, as expected, high volatility on BOJ. Let's talk about this real quick. The long-term trend is down. Yesterday in the trade room, I mentioned the fact that if you're going to trade this currency pair, probably go with the path of least resistance over the past several months has been the downtrend. And you can see the downtrend here. So if we go down to the 4-hour time frame, you talk about the path of least resistance and the direction for this currency pair. Take a look at that. On the BOJ, we saw a little bit of a spike higher into the 102.50 level, right into that blue trend line, and then suddenly a reversal and a turn back lower, back underneath the pink zone, 101.35, where our support has been. You know, we've been buying 101.60 over the past couple of days. If you were in it, it was kind of nice as it pushed back into 102.50. I hope that you took measures at that point to protect your trade if you were in it. And now we see it turning back down. Does that mean we instantly want to sell it? I don't think so. I think we want to see further evidence that this is going to continue to go down. At this point, my expectation would be it holds underneath the pink zone, 101.3560, maybe even finding resistance underneath there. A rally back into it, resistance becomes an opportunity to go short, because then your risk is just above the pink shaded area if you see that rally into it as resistance. Positive news for the U.S. could look for this to turn right back around, go back above the pink zone, into the yellow zone, and to the green zone. That's positive for the U.S. later today. If it's negative, we look for the continuation of this fall, like probably some resistance into the pink zone if it makes a rally there, break the blue zone and go lower. So at this point, I'm not really willing to play this volatility, but definitely watching for what happens after the FOMC later today. Take it over here to the AUD/USD. As expected, we see the market challenging a little bit higher into the pink shaded area towards 7,600. We've studied the green trend line, we've studied the red trend line, long-term weekly trend line, and we're making our way back up to it. Challenging right now a little bit above 7,600. If it stays above that, probably challenging 76.45, 65, which is the blue shaded area here. We've seen resistance there before. You see this little triangle pattern over here on the left in the blue zone, just above the green circle, resistance even here. So we know that the blue zone has potential to be resistance on any rally there. But positive news out of the U.S. later today, we look for this to turn around and go back down. Negative, we probably look for the break of that 76.50 level, the mid 76s, the blue zone, and a turn higher again. So we'll continue to watch this, but at least this point, it's anybody's game, depending on how that FOMC news is disseminated later on today. But again, if it's positive for the U.S., we look for this to turn lower again. If it's negative, back higher once again for the Australian dollar. And lastly, over to the New Zealand. We've been studying selling opportunities. In fact, yesterday took a sell here on the New Zealand dollar. It was a very profitable trade. Now the market's come back up. If you were still in it, you're out of it now, likely with your break-even stop loss. I look for a hard take profit into the support zone because of all the potential volatility today. Of course, yesterday we saw a dip lower for the New Zealand dollar. Today we have FOMC. We also have some news out of New Zealand later on today, so you want to pay attention to that, even shortly after the Fed information later on at 2 p.m. So interesting stuff here. Let's zoom it in one time here on the daily time frame, and you can see the pink shaded area. We've studied resistance here a lot recently, the pink shaded area where the blue circles and ovals are, and we've been into that area again. Take it on down to the 4-hour time frame. You zoom it out a little bit, and you know we've been studying this pink shaded area is resistance. Yesterday, the sell into the 73.40 or so level. You can see it falling off of there, taking a turn all the way back down to the orange shaded area. So it was quite a profitable trade from the orange shaded area, or from the top of the pink zone, let's call it 73.40, into that zone. We saw it push down 50 to 60 pips of profit into the orange shaded area. Found support, and then turned right back around and came back up. 73.50, the top of the pink zone, is going to be our main area of focus for the day today. If we break above there, if it's negative for the U.S., we'll look for this to turn higher again. If it's positive for the U.S., we look for it to turn lower. And then, of course, shortly after that, like I said, we do have some rate information, rate statement for New Zealand at 5 p.m. Eastern U.S. time. So quite a potential volatility, quite a lot of potential volatility for the New Zealand dollar today. So definitely watching it. All trades that I had are closed right now. No open positions, and it's very likely that I don't open a new position prior to the Fed statement later on today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.